Governing Board with St. John's representative here, Mr. Jose Penn, the EDA Board Secretary, and all of the members of the EDA team assembled here this evening, those present. I am equally as excited to be here because I think what we were able to do over the last week is to provide residents with information that they can now get a piece of paradise. The VI Economic Development Authority VI Slice program is a gap financing program. It's a gap financing program. We don't hold a mortgage with you with the bank. You have a mortgage with the bank. The bank is our client. And what this program intends to do is to get you to that step to make a deal with the bank by providing you with financing for closing costs, insurance, whatever. This is St. John, I know. So whatever you are short in consummating that deal and agreement with the bank, we will provide you that shortage up to $200,000, that is. So what we have assembled this evening is a team of professionals, industry partners, for you to meet with to begin that process today. Represented is Banco Popular, USDA, and Ms. Gums mentioned all of the other participating lending institutions to include First Bank, merchants, and mortgage capital. All of these are available to you to begin this process. What I encourage you to do this evening is to take all of this information and food that we are giving to you freely and put it to good use. This is an opportunity that is not going to be here forever. You will have information as to the intent of this program, its sunset, and what we will be able to facilitate and assist you with on your individual project, circumstance, or situation. So again, we thank you for being here this evening, all of you. During the question and answer period, ask any question that comes to mind. The only dumb question is the question that's not asked. Don't feel embarrassed, don't be ashamed, don't be shy. If you need to liaise with any one of our team professionals here, see us. They are all scattered around here in these colored shirts with EDA. Talk with them. These are the professionals, okay? And we will be able to assist you to get you to that step. Again, good evening. I welcome all of you, and let's make this here an interesting conversation where you begin that process of owning a piece of paradise. Thank you.
Thank you, Mr. Benjamin. Before I bring up our next presenter, I would also like to thank Ms. Shakima Jones-Sproul. She really assisted us in helping us spread the word about this program to the St. John community. Thank you. Yes, and also Ms. Dior Parson. She really assisted us, especially on Saturday at the Food Truck Festival. She really helped us spread the word on this program. That's why the house is so packed today. Thank you, thank you, thank you. I would now like to present Ms. Monique Samuel. She will be doing the presentation on the VI Slice program.
Good evening. I'm not sure if the screen is visible to most of you in the evening. Can you see it, Attorney Bola? Awesome. I know my vision bad, so I have to think of others. Yeah. Good evening again. We welcome you. Thank you for coming out this evening. I won't go through much of my slides because throughout the introduction and welcome remarks, our ACO Benjamin spoke about the purpose of the VI Slice program. But one of the things I want to bring to your attention, the Virgin Islands Economic Development Authorities, the administrator of this program, were there to provide the financing where you fall short. And so, how this program works, you would apply to a bank, one of the participating lenders as mentioned earlier, USDA, Banco Popular, First Bank, Merchants Commercial Bank, Oriental Bank, and there's also Capital Mortgage Services. And so when you apply to that lender, and if the lender identifies or approves your transaction, that is where the application comes to the EDA and is not presented by you, the applicant, or the potential home buyer or homeowner. The lender channels that application to the VI EDA through a portal, right? And as Mr. Benjamin mentioned, the goal of this program is to increase home ownership, and I believe that's why you're here this evening. Gap financing is really your aunt, your uncle, your grandmother, your sister. I think I spoke with someone earlier and they mentioned to me that their sister is assisting them with their project. We are there to help you where you fall short, not where you have your savings and you can assist yourself with the difference of the transaction, and then you intend to have that savings pocketed and not put towards your investment, which is your home, whether it is to purchase or to construct. We come in where you fall short. The gap, you don't have it. Not where you have it and don't want to use your funds. Am I clear? Okay. Under the VI Slice program, there are 3 activities. There's the home purchase and rehabilitation. If you're going to be purchasing a home and that home requires any sort of renovations, that is an activity, an eligible activity that can be financed with the VI Slice program. If you want to purchase a home and that home is not in need of renovations, that is also eligible through the VI Slice program. I believe from 2008 or maybe earlier, there weren't much construction activities throughout the territory. Now you have banks that are willing to offer those construction mortgages because you now have the additional help, the additional support, and VI Slice can help you achieve that goal. So under the VI Slice program, construction is also an eligible activity. You're just not going to be purchasing that home or constructing that home. There are costs associated with a transaction. Just can't walk into the bank. Someone is selling your home for $200,000. The bank is financing 80%. You're short, let's say, don't do the math. You're short $90,000. The VI, you're coming in with, let's say, $5,000. VI Slice is helping with the difference, and then voila, I'm going to move into my home. There's costs associated with a transaction. Mr. Amaro will speak more to costs that is associated with closing costs in terms of mortgages. VI Slice can assist you with that as well. So closing costs, down payment, construction, these are all eligible activities under the VI Slice program. I want to address one of the main questions we've been receiving. There's a question that's been frequent to the EDA. I have land. I'm not interested in constructing a land. I really prefer to purchase. You cannot continue to have that land and still yet purchase a home. It's either or, right? So if you have land, the program is not there to enrich. It is there to assist you as a first-time homeowner. Not where you have the home and then somewhere down the line you begin to construct, start up that other home and so forth because it's your dream home. you have to make that decision. So you have to liquidate that existing property that you own. And those monies that you receive as a result of the sale after you've paid all your expenses should be put towards that transaction. And if there's still a shortage, then the VI Slice can still assist. There's also another question that we've been receiving. My mom have a home or have a property. I'm on that property deed with me and my other siblings. Will I still be eligible? You have interest in real estate. What you may have to do, by the way, I'm not an attorney, I'm not allowed to provide legal guidance. You may have to make a decision. Either relinquish your shares, your interest in that property, maybe to one of your children, or maybe allow for your other siblings to, obtain the other, like all of them without you. So you have to remove yourself from any interest in any real estate, right? So you can't have interest in another real estate and still yet participate in a VI Slice program. But we could speak a bit more of that when we go further in a transaction. So just so you could understand. For the VI Slice program, you may have heard that we received $20 million. Not because we received $20 million and you have this dream of constructing a home for $1.5 million and, EDA will be able to give me where I fall short. There's a cap. And the maximum ceiling in any of our activities combined, we cannot exceed $200,000 to a single transaction. So that's where our cap is. And if we're participating in the closing cost assistance, our closing cost assistance, we cannot exceed 20% of the cost. How do we calculate that number? Your total closing costs divided by either the project cost or the appraised value. That's how you get by your percentage. Don't let that distract you. You came here this evening for one purpose only, to become a first-time homeowner. There are income eligibility to this program, and that's why it's referred to as the moderate income program. So any amounts under, if you're on the island of St. Croix, any amounts under, remember I mentioned to you earlier, the vision is bad. So any amount under 43,501 and above 216,300, then you're not considered moderate income. Any amount lower is a different classification. Any amount higher, different classification. It must be within this range based on how it's designated by district. So St. John, 7,151. Any amounts greater than 750,000, you're not eligible for this program. Within this range, yes. St. Thomas, 45,298. Any amount greater than 242,900, then you are not eligible for this program. So these are the ranges. You also have the materials before you so you could follow along, not directly the presentation. When you visit our website, at the end, thank you. When you visit, this is just a list of the requirements that we look at when the lender send it to the request to the VIEDA. But if you visit our website, there's a list that there's another guide that provides you a 2-page list as to what is required when the application is submitted to us. So one of the requirements that we have within the program is that you must attend the Virgin Islands Housing Finance Authority Home Buyer Education course. Once you obtain that certificate forms part of the application. If you've obtained a certificate prior to 2012, after 2012, it's up to the lender to determine whether or not that certificate meets their requirement. For the VI Slice, there's no expiration date to your certificate. And as you heard I mention, for the VI Slice, so if Housing Finance Authority has something else in place, they're saying the certificate is only for a period of 5 years, then you must follow that policy, because that is where you obtain your certificate. But if you present that certificate to us within your package and it's dated 2008, 2012, or 2020, it will be accepted. But you must attend the home buyers education program, and it's important. And again, Andy will go more into details with the discussion as to what you will experience within that course. The other requirement, as I kept mentioning throughout the evening, you must be a first-time homeowner. There are some exceptions to the program. Let's say, for example, you were married before, and you may have, you divorced and you lost that property when you were settling your divorce by way of divorce decree, and it was 3 years ago prior to the date of the application. Those are some exceptions to the policies, right? So let's say, for example, you may have sold your home 3 years ago for whatever reason, may have fallen ill, needed the funds to pay a debt, medical expenses, whatever. That was 3 years ago. You are an eligible first-time homeowner under the VI Slice program because it was 3 years ago. And that information you could find online as well when you visit the VI Slice website. Another requirement of this program, you must be a resident of the Virgin Islands 3 years preceding the date of the application. Let's say, for example, we spoke about some other exceptions earlier. Let's say, for example, you may have been displaced as a result of the storms that occurred back in 2017. You may have had to relocate because you lost your home. It took a while for you to, obtain another home, or it was difficult for you, or you may have had some medical issues, or you relocated as a result for education or work. Those are some exceptions to the program. Just speak with your lender, and that lender would know how to communicate with us at the VIEDA. They may ask you for a letter of certification. A lot of what we're requiring is you certifying, so you ought to be honest, right? We're not going out there to dig to verify whether or not you did relocate because of, you being displaced. You ought to be honest, right? So that's by way of certification. Another way the lender, or documents the lenders can use to verify whether or not you are a resident of the Virgin Islands is perhaps maybe your tax returns, your lease agreement, maybe job letter. But again, the document that is requested is based on what the lender have asked you for. We're only saying these are our stipulations of the program. So what the lender has requested is what the lender would then submit to VIEDA, and they will verify to make sure that it meets the program's eligibility requirements. We're not there to police the bank, to tell the bank, well, that won't work, we want this, we want that, and so forth. They all have been trained, so they are familiar with the program. In fact, one or two of them think they know the program more than VIEDA employees. That's how well trained they are. And the next thing too, they have our contact number so they can call us if they have any questions. For the VI Slice program, we're not receiving applications based on pre-approval. You go through that legwork with your lender. We are requesting the applications to be approved and sent to us. So when that application is approved and sent to us, we're just there, check marking the boxes, verifying. If they told us your gross monthly income is $5,000, we will check whatever document they use, whether it's a pay stub or the verification of employment form or the tax returns or the W-2. Whatever document they submit to us, we ought to be able to come back to that same number that they use to determine that is your monthly income. So once we can verify that is your monthly income, that's a checkbox. Once we can check off that we receive your identification, that's a checkbox. Once we can verify that we receive the sales contract if we're purchasing a home, that's a checkbox. Once we can verify that we have your tax returns or whatever documents, that's a checkbox. And nothing on this program is a secret to you. You can get all this information online. Our frequently asked questions is online. Our flow chart, how the process works, is online. Our guide to this program is online. What else we have online? I think our brochure and some other information online. So you have an idea of what the bank will provide to us to verify your request. And when they send that request to us, we're just calculating. And they should know exactly what they're looking for. Sometimes what we calculate may be less than what they ask for, because we're really looking at some other information like your savings that they may not have taken into consideration. So, or at times their numbers are a bit higher than ours. So, but at the same time we work with each other. But it's just documentation they're sending to us, we're verifying. So VI Slice is not a hard process. A lot of your legwork starts with really the bank, and that's why we're here this evening to push this program, because at the end of December 2026, this program is no longer. So do what you need to do now to begin the process. We should not allow any monies to return if it is here for a purpose, to serve a purpose, and to benefit you. That's why you're here this evening. You want to become that homeowner. And you may not have all the resources that is required. There's no shame to this process. The monies is for us. Become one in sync with your lender. Speak with them. Keep in contact with them. Start your process. Ask them questions. Send them email. Follow up. When they ask you for a particular document, you don't have it, you let them know you don't have it so that they can assist you with other alternatives. What is my alternative? I don't have my tax returns. I've lost it. I had a leak in my home. My home got flooded. Or I don't know exactly where I put this, I put that. Allow for them to tell you what is the alternate source document that you just turn away and you have your mind, oh, this bank is giving me a hard time. This money is only here for a short period of time. Why allow it to go back or to be reprogrammed for some other use? The big thing that's being talked about, $5,000 earnest monies deposit. We want to clear the understanding. The $5,000 earnest monies deposit references if you're getting into a contract, a sales contract, you're purchasing a home, or you're purchasing a piece of lot. When you negotiate that contract with a realtor, and by the way, the property in which you're interested in purchasing must be on the open market. It can't be a cousin just hear about the VI Slice program and say, hey, you could buy my house, It doesn't work that way. It has to be on the open market. It's not that you decide, okay, 7 of us and my mom's deed, I'm the one that live there, let me just buy I don't have to deal with my sisters and so forth. The property must be listed on the open market. It's not a today for today decision. I just decide to sell my property. It must be listed on the open market. Well, then if you know of a cousin that have a piece of land, tell a cousin to hook up with a realtor, and then list it. Maybe the cousin, instead of selling it for the 20, right? So, but there's, as you mentioned that on a serious note, when you begin to speak with your realtor, there's something that's referred to as negotiation. Negotiate. We're not saying that your negotiation will solidify a contract, but that's where the conversation comes in, because you're hand in hand with a realtor until you become that homeowner, right? Until that transaction is complete and they get their check. So you negotiate that contract or whatever, that's needed. With when you're going through your contract negotiation, we're saying to you that you must give your $5,000 earnest monies deposit when you're purchasing that land or you're purchasing that home. those monies will count towards your transaction. If you already own the land, the difference of the $5,000 will go towards your construction. So there's two ways to that $5,000. If you don't own the land or you don't own that home, you will then provide those monies to your realtor by way of check, money order, manager's check, wire. But whatever you do, ensure you receive a copy of the cancel check from your bank as well as a receipt from the realtor. The light. Because that's something that we need for our file. You gotta take out the light. I can't see. Another, you're not able to see this on a slide, but for VI slides, we're requiring that your minimum credit score is 620. Again, this is VI slides requirement. This is not the lender's requirement. So for us, if your credit score is 620, it's acceptable for the VI slides program, but that is not the policies and the procedures of the lender. You fall within the lender's requirements. But for the VI slides, it is okay if your credit score is 620. Another requirement of the VI slides program, the lender must be willing to provide at least 60% financing. What we've been seeing over time is 80%. So that you're even in a better position. You're getting more monies when the lender provides that 80% on the transaction. But for the VI slides, we're saying at a minimum, the lender should be able to provide you 60% financing. If you're getting greater, great. Then you're coming out of pocket with less. We're also saying that your mortgage payment should be at a debt to income ratio of 36%. That is a VI slides program requirement. If the lender allows for your debt to income ratio for your mortgage payment to be greater than that amount, that is also an exception to VI slides program. We're not strong arming the lenders. That's their policies and that's their procedure. So if your mortgage payment calculation with the insurance and the property tax along with the monthly mortgage payment exceeds 36%, 45%, that top number, or 50%, and the lender is okay with it, the same for EDA. EDA is also okay with it. These are just the parameters of the program. Every program needs requirements, right? And all your debts combined, including the debts that is listed on your credit report, along with that mortgage you're factoring in, the new mortgage, the proposed mortgage payment, should not exceed the 43%. But if the lender allows for your debt to income ratio to be greater, it is also not a challenge for EDA. We are not going to turn back that transaction because your mortgage payment exceeded the VI slice ratio requirements. We are not going to turn back your application because your overall debts, including that proposed mortgage, exceeds the 43%. If the lender sends it to us, it tells you that they're okay with it, right? Remember we said earlier that all the lenders are trained for the VI slice program. And if there are questions, they are free to refer those questions to us. There's also another calculation that we look at, the maximum combined loan to value ratio. How we calculate that ratio? It is your proposed mortgage, the amount that you're getting from the lender, that loan amount from the lender, and the amount that VI Slice is going to contribute in order for you to become that homeowner. So the bank's loan amount and the amount you're getting from VI EDA for the secondary gap financing, those two amounts, when you add them together and you divide the value of that property, as long as it falls within 105%, and it does not exceed that number, you will meet the eligibility requirements for VI EDA, VI Slice program. If it goes above that number, that means you may have to reach out to the paternal grandmother, the paternal auntie, or maybe wait until maybe another payday, or maybe reach out to the cousin that had owed you some money many years ago that never repaid you. I need that money. So you put that difference in, and you could help that number to be reduced. Because the greater that number, that means that you need some more pocket change. But VI Slice cannot offer you that pocket change, because remember, we cannot, the bank's loan and what VI Slice is combining together cannot exceed 105%. The bank loan again, the VI Slice contribution, add that together, divide it by the appraised value or the project costs, whichever is lower or whichever figure the bank is using. If that number exceeds 105%, don't ask the bank for any more money. They gave you what you could afford to pay. Go back to that family member or someone else that's willing to give you that monies or that difference without a loan. Because if they're saying, I want my money back, sign this piece of paper, that's additional debt, right? But if they gift it to you, just make sure that they put it in writing that this is a gift to you, and they don't expect any of it back. There is to assist you to become a first-time homeowner. So once that's documented, you provide that to your lender. If the lender requires that that letter be notarized, remember, they are in charge. The bank is in charge. We are only, who are we? The VI Slice program, your auntie, your uncle, your cousin, your grandmother. We are there to support where you fall short. And again, we went through much of this, how the program works. You can also find it online. There's a flow chart that tells you step by step how the program works. So much of this we discuss. And again, we work behind of the bank. You will visit the bank of your choice, Merchants Commercial Bank, USDA Rural Development, Banco Popular. They're the only banks that are participating in all of the activities: home purchase, rehabilitation, construction, and the closing costs. First Bank, Oriental Bank, and Capital Mortgage Services, they're only participating in home purchase and closing costs. And the decision is yours. The banks that are participating in construction, they're Merchants Commercial Bank. They're not here with us this evening, but they were here with us last evening. They do have some requests in our pipeline, and they're all construction. Banco Popular as well have requests in our pipeline. It's a construction, I think, straight up purchase, maybe the other person. Oriental Bank, they're just participating in the purchase and the closing costs. So of the banks that are participating, I'm only going to list the ones with construction: Merchants Commercial Bank, USDA Rural Development, and Banco Popular. The others are participating only in the purchase and closing costs. And it's your choice, right? But all of them have sent through transactions before. Rural Development, they sent us some construction. I think the other one is a purchase. So this program is real. This is no campaign push. If it was a campaign push, the banks would have never been here this evening. I can represent that. So get on the bandwagon. Do what you need to do to get things going. December 31st, 2026, this program may not be available, but as of right now, I'll tell you, the program will not be available. So do what you need to do from tomorrow. Tonight, ask the questions. Begin to let this turn. turn off the social media unless it's giving you information to come to another event for the VI slice, so things you could benefit from. Put some things in the sacrifice side in the parking lot, right? Because this program is a once-in-a-lifetime program. Mr. Amaro will tell you, and I'm not taking away from his presentation, there's no other program out there like this. None. Thank you for listening, and I will remain here this evening if you have any questions and so forth. And the questions will be at the end. Thank you.
Thank you, Monique. Before I ask Nadine to come and make her presentation, I also want to mention that if you're interested in purchasing a condo, condos are eligible through the program as well. Nadine?
Pleasant good afternoon. Let's do that again. St. John, pleasant good afternoon. Or good evening. Okay. My name is Nadine Marchena Ken, and I am the Managing Director of the Enterprise Zone Commission. How many of you have ever heard of the Enterprise Zone Commission? One hand. It's okay, and I understand why. Because we do not have enterprise zones on the island of St. John at this time. But I was asked to come and tell you a little bit about a couple things. One, the enterprise zones, if you happen to, and I know many of you have family on the island of St. Thomas, if you happen to decide that even as a St. Johnian, you want to buy something on the island of St. Thomas, that you may want to consider looking in the enterprise zones. Because with buying your first home comes some extra bills, right? You have the mortgage, of course, and then you have property tax, and you have other bills, but the enterprise zone provides the ability to hold your property tax to the pre-renovation level. Because the tax assessor will come along and say, oh, you fix it, you buy this house and you're fixing it up? Now we're going to increase the property tax, right? Well, if you're in an enterprise zone and they're located on the island of St. Thomas in the Savannah Down Street community, Down Street goes all the way down to the graveyard, or the Garden Street Up Street community, right? And that goes to the top of Polyburg Hill, close to Charlotte Molly High School. Then maybe you're eligible. So what you would do is you would look in that area, you would find a potential location, you do all your VIs, like you go to your bank, right? Because the bank is who you go to. You mention to them that if there's any shortfall, please use VI Slice, because that's what I want to do. And then you come back to us and say, you know, I'm in the enterprise zone, and so I want to apply for that. And you come directly to us to apply, the EDA. Okay? So, enterprise zone provides 25% of whatever you put into the building to fix your building up back in tax credits to you for either income or gross receipts. That's your income that you get from your job. So now you don't have to pay as much taxes in income or gross receipts. And it also provides that it holds your property tax to pre-improvement levels for 10 years. For 10 whole years. Now, you are here, and I am pleased that you're here, and my heart is filled that you're here. Because there's been quite a bit of discussion, some on the radio stations, about who get and who ain't get VI slice, right? I am glad you're here because it means that maybe you may take action. But I'd like you to step a step further, because my pet peeve is that you hear a lot of great information tonight, and then tomorrow you get busy with, oh, you know, my child have a program here, I have to go and do, today is shopping day, I have to do this. And my boss has something to do. I want you to commit tonight to spending an hour or two, maybe an hour, every evening working on getting yourself together to make this step. Because we as a people will hear some fantastic information, yes? So far you're hearing stuff, yes? I'm hearing. Maybe I'm deaf, right? But then, do we take action? We quietly say, okay, and then we see somebody else do it, and then we get upset. Why I couldn't do that, right? Part of it is putting yourself together and being ready to go to the bank, right? You don't go out to your house with one shoe on and see you ready to go to work. So let's be ready. Let's set up to make that difference. Let's spend an hour each evening. Commit to doing this, because the Economic Development Authority is about growing the economy and building wealth for the people of the Virgin Islands. And this is the best way to do that. So I'm going to leave you today with those thoughts. Please, please listen to everything that has been said. Grab every piece of paper to find out about that. The enterprise zone information is on this document. And then work on it every hour, every day, 1 hour at least, to take action. Thank you for the opportunity.
Thank you, Nadine. I would now like to present Andres Amaro.
Good evening. Good evening, team. Happy to see everyone here. This is the third night I'm doing this. We began this campaign in St. Croix. We did it last night, and now I'm here with you guys. Been a wonderful journey. I want to take time to say thank you to the EDA and their wonderful team, Mr. Penn, Mr. Benjamin, Monique, Charmaine, Nadine. Please give them a round of applause for putting this together. Thank you, team. I've enjoyed myself. Okay, so you heard the ladies talk about this program that they made available to you. Sorry? Thank you. My name is Andy Amaro. I work for First Bank for about a little over 30 years. So I come to share some of my information and knowledge with you so you can understand what the ladies are offering here. How do you get access to that? Let's say you came here, you're starting from zero. You have nothing, and you want to get to this money so you could get to your goal of owning a home. How do we do that? That's what I'm going to get into. So pay attention, take notes, be ready to ask questions, okay? So without further ado, let's go. Two most important things you need to take out from this session today that I'm about to give you. This is how you start your game. What did the EDA say? You have to invest at least $5,000 of your monies, your skin into the game as the first part to begin to be eligible for this program, okay? You have to invest at least $5,000. So to do that, you need to open a bank account. You need to decide which bank best fits you and get yourself down to the bank and open a bank account and begin some cash flow moving into that account. Because at the end of the day, it's going to take deposits into your account to get through this transaction. The second most important thing after you establish an account and you begin, and I'm going to get into talking about savings and how you begin your savings and the consistency. But who will really teach you about that is the VI Housing Finance Authority. And for you to be eligible for this program, you have to take the course. So the second thing you need to do is get down to VI Housing Finance Authority, register yourself into the class. They will begin to teach you the techniques, the strategies of saving, budgeting, cutting expenses, managing your credit. And in that class, I do the education program. As a matter of fact, this program that I'm giving you now is exactly what I teach in the class. So you're actually getting a head start thanks to the EDA. So by the time you get into that program, you'll be well educated. So you get into that program and begin your journey. This is a journey. You can't let obstacles stop you. There are going to be obstacles, delays, frustration, but this is a lifetime goal. I don't know how many of us plan to do a bigger transaction than buying a home, but that's a pretty big transaction, and the banks take it seriously. EDA takes it seriously. That's why they developed this program, because it's difficult for the average person like you and I to go out and have the 20% down payment, the $5,000 to $10,000 in closing costs. It's difficult for us to put that together with all the other bills we have. Well, what they're saying, you start with 5, we cover the rest. Don't underestimate the power of this program, okay? Get started, because the only person you're committing to are yourselves. Not for EDA, not for the bank. It's for your dream. Whatever your goal or your dream is as it relates to real estate, they are here to help you. Now, for me, when it comes to savings, what made it easier for me? Because I know myself, when it comes to savings and divvying up what's going to savings, what's going to party, what's going to bills, it could be difficult. And the minute you get an emergency, if your savings account sitting right there next to you, oh, well, I just saved a 500 there, a little short. I need to go to that and take out a little bit of cash. Then it'll never work. So fortunately for me, at my job, they had a program where they would take out, if I made $800 on my payday, I will tell them, you take out $200, put it in a savings account for me. Then I know I have $600 that I have to budget the rest of myself. For me to get to that money, I have to write them a letter. Just about beg them to give me my own money. But that's okay, because I know myself. I have to discipline myself. I have to be honest with myself. So if I need somebody to hide that and hold that for me, let me find another way to take care of an emergency. That's what works for me. You have to decide what works for you. But you can't get past it. You have to, that begins your discipline and your budgeting. Where you shop, where you rent, whose products you choose based on pricing puts money back into your pocket. And I'll point out the importance of savings as we go through this program. But get started, because most importantly, why? There's a 2-year expiration on this program. Like Ms. Samuel said, do not allow this money to go back when they're telling you, here, take it. Take it, just check these boxes for us. Take it. But if you don't want it, we'll gladly take it back. We could use it for other purposes. So jump on it. Begin by starting your bank account. Well, which bank would I tell you go to? But it's important that you choose the right one for you, who is working with you, because you're going to need a lot of patience. It's going to be frustrating, so you need to be able to build a good chemistry with your friendly bank. One. Second thing, credit. You have to know your credit. That's what we're looking at to determine whether you're eligible or not. And there are a lot of mechanisms, a lot of tools out there on the internet. Go up on it. Credit Karma, annualcredit.com. I'm going to show you one of the sites you could jot down. Make sure you go up and you begin to get the reports. Look at what your credit has, because that's what we're going to look at. Determine on your credit report Wow, I didn't even know I had this large medical bill. I didn't see the letter. Nobody didn't tell me. Resolve it. Now you know because you went and you checked yourself. And then learn how to manage your credit going forward to build your score. We talk about, Ms. Samuel talk about 620 being the minimum, which is fine. We could work with you with 620 come up. I'll say to you, though, you'll be hurting yourself if all you're trying to do is accomplish 620. You need, the higher the score, the less expensive the transaction is going to be for you. So you need to achieve the highest score you possibly could. What we're saying is you don't have to wait for 800 score to apply. You could begin applying, once you reach within the range, but you don't stop repairing your credit so that you get the best price possible for, sorry, I didn't realize. This is what I'm using, right? This works? Okay, good. Just making sure. Right, make sure you get the best credit score possible so you could inherit the most savings for yourself. Okay? So 620, 640, 680, yeah, come in. I'm going to charge you a high rate because what that tells me with a score that low, we experiencing issues with paying bills. And that's not a big problem. We all do. It's real life we live in. But it can't be negligent. You have to be able to explain, well, wow, yes, I didn't get to pay this loan on time because I lost job for a short period amount of time. I got myself back in order and I'm paying the bill again. Those are acceptable reasons that we may say, okay, we could work with that. It can't be just one day you say, well, I go in jam. That billing get paid 2 months later when I catch up with it. It's going to count against you. It's going to drop your score. It's going to make you a less appetizing client for us because we're going to say, whoa, this person here not showing good character in paying their bills. Right? So we get that. Out of this program, when you leave tonight, 2 things you should do immediately. Well, 3. Register with VI Housing Finance, start your bank account, and pull your credit report. Start to review it. You don't know how to review it? That's why you get friendly with a banker. They will help you. Or get friendly with whoever may be a little more savvy in reviewing those reports. I recommend coming into your bank. They will have the best advice for you. Okay? Excellent. So let's move forward now with our training. And we just talked a little bit about these points. Get to know your credit score and your history. Your credit score is taken into account as a criteria to evaluate your mortgage application. Check and access your credit report before signing a purchase agreement. This way you will obtain more accurate product and interest offer, and you will be able to identify factors that negatively impact your credit report. Once you know this information, you walk into a bank, you may not even have to ask the banker. You will know. No, I bill my sky 700, so let's move on to the next step. We passed that box. Dealing with these type of transactions is good to go with confidence. If you're hesitant and you're a little shaky, we're going to have to try to reinstill that confidence in you and help you build up. You want to be prepared. Preparation is the key here. Committing to yourself is the key here. When it gets tough, don't say, well, I ain't doing that for the bank. I ain't doing that for EDA. I'm doing it for me, though. I got to get through this. Visit where you're going to purchase. Know the pros and cons. This is a huge transaction. 2, 3, 4, 500,000. St. John, 6, 7, 800,000. 15, 20, 25, 30 years. You don't want to go live someplace you're not happy and you got to pay that mortgage every month. You want to be happy where your home is. So when you make that huge mortgage payment, you can say, well, it's worth it. I breathe in right now in my home. Okay? So visit your place. Know the pros and cons. How far is it from work? How far is it from school? Is it a nice area for my children to play in? Is it where I want to be? Is it where I dreamed of living when I was growing up in the Virgin Islands? list your preferences, organize them, get together with your closest family and discuss that this is the right fit for you. Determine your capacity for monthly payments. And as I move through this is one of the important ratios I'm going to show you how to calculate. Another step, you can go home, calculate yourself, and see where you are in the process and how likely you are that a bank will entertain your request. It's called your debt to income ratio. Your total debts divided against your total income on a monthly basis. And there's a ratio that we use where there's a cutoff. When I show you how to calculate that, you will go home, you'll calculate it, and then you will know the work you have to do to get yourself in the right position. And that will determine your capacity for monthly payments, closing expenses, down payment before you explore the market. After you select where you want to live, and the one thing I will add when looking for a property, if you don't already have one, is use a real estate agent. They're helpful. They will get paid through your transaction. You don't have to come up with extra money to give them. But they're very helpful in the search. In finding, once you tell them what you want, they will work for you to go and look and negotiate, find the area and bring options to you, for you to say to you, look at these, see what you like. It was worth it for me. It took me, and when I began looking for a home, it took me close to 1.5 to 2 years to find a home, not only where I wanted to live, but more importantly, that I can afford to live in. Because I never wanted to put myself in a position that I pay this mortgage and then I have $5 to get to the next payday. But don't get me wrong, sometimes you have to come through that fire. But if you're going to put yourself in a tough position like that, be just as disciplined to have a plan to work your way out of it, because you were just trying to achieve your goal of buying a home. It's like when I went to college, those were the brokest days of my life. Yeah, they were. You know, I had $5. Luckily, in those days, with $5 in my pocket, I could have bought a loaf of bread, cheese, and juice to put in my face. Luckily, because prices were not so high there. But I knew I was coming through a tough time to get prepared for better days, because I was preparing myself to face the challenges of life. You have to prepare yourself to face the challenge of getting a mortgage. And it is a challenge, make no mistake about it. But I know you can do it if you want it. Budgeting, saving, paying off debt. We just talked about that, right? And the importance of budgeting, cutting your expenses. And if you want key strategies, techniques, maybe you can't figure out, how do I budget? How do I cut an expense? Join the Housing Finance Authority class. They're going to teach you that. And that's why EDA makes it a requirement for you to get certified before you could even get into their money. So if I see you again, because I gave that class, then I know you're well on your way and you're listening to me. Okay? Paying down your debt. There are agencies to help you repair your credit. You could find them all over, but I'll tell you the best way to repair your credit. Pay them. Pay them down. Don't have a credit card with a $5,000 limit and you already run it up to $4,999. And then you're telling the bank, yeah, but I pay my $25 minimum payment. It's not going to happen. The only thing you're paying is the income going into their pocket. You're not paying down that debt. You're not showing the bank the character that I don't put myself out of control. I control my debt. I pay them down. I have discipline. That's what we need to know. If you want us to lend you 2, 3, 4, 5, again in St. John 6, 7, 8, right? It's no joke. You got to take it serious. This is what it's about. This is what this class is about. This is why EDA is putting this program out there. We know it. We live it. Don't think that we have something special and we could get it. We have to go through the same thing, and they recognize it. And this is why they're saying, guys, don't let us send this money back. They will take it back from us if you don't jump on the boat right away. Take the steps to do what you have to do to get yourself eligible. Obtain your credit reports. We talked about that. Review for errors. They do have errors. Sometimes there are bills there that's not associated with you. Identify them quickly. Get them off your report. You have delinquent facilities. Cure them. Put a plan to it. Well, this is why you're going to do my paycheck. Pay yourself first. Remember, that's what I said. Pay the pig first. That little piggy bank. When you get your check, pay yourself first. That's how that savings is going to build. Then you get in and you start to say, these are bills here. This is the plan I'm going to put together to make sure I get them paid off. And it better be less than 2 years, right? Why? Because it's expiring in 2 years. So you guys have to expedite this. Establish a written plan. Do it for yourself. You need help, get somebody to help you. Like I tell you, I'm glad the bank does that for me. I need help saving. I have that money sitting there. That's the first thing I jump in when I see something I like. You hold that over there for me. All of us ain't like that. Some of us could self-discipline. No doubt about that. We'll begin that practice. Having a savings, these are the reasons why I'm expressing this to you, makes it easier to purchase a home. Saving can be hard given the challenges of many first-time home buyers, high costs, student loan, down payment. You will be responsible for those things. But EDA is saying, just say 5,000. We got you. We got a rest. I ain't saying stop at 5,000 because there are a lot of costs that even comes after a mortgage you have to be prepared for. You know, owning a home is expensive. WAPA. Everybody know about WAPA. You don't even have to own a home to know about WAPA. Right? WAPA, plumbing, yard. It adds up. And if you ain't ready, it could sink you fast. If you're prepared, you'll be ready to face the challenge. Increase your savings. See if there's a way to tighten your budget and lower your current housing costs. Automate your savings. I talk about how helpful that was for me. You know, not all jobs offer it, unfortunately, but there are mechanisms out there you can find if you're committed to doing it. Don't let the obstacles stop you. Remember, I used to play for a softball team, and we had a game, and it was raining outside. My coach called me and said, Andy, where are you? We're going to play ball. So, coach, it's raining. And me going, well, we don't cancel games at home. We cancel them on the ball field. Come down, show up. Don't let the little rain stop you from coming. The point is, don't let obstacles stop you. You got to be forceful. You got to be committed. You got to be prepared. Okay? Good enough? Here is where you can get your credit report, www.annualcreditreport.com. You get one free credit report a year. Here's a list of the reasons why. And we check all 3 reports, so you must too. There are 3 reporting agencies, Equifax, Experian, TransUnion. Banks use, different institutions use each one for different purposes, car loan, credit cards, mortgages, we check all 3. Because we want to know, and even on your pay stubs, I will look to see if you have a little credit union loan with somebody on the side, because we have to include all debt in our calculation, because we have to determine what you can afford to pay. We can't give you something you can't afford to pay, because then the bank shooting itself in the foot. That means we ain't out there to make money, we just out there to give it away. That's not going to happen. Okay, so at the end of the day, building your cash flow is important too. Reporting all your cash streams, your income, business, sole proprietorship, child support. Every piece of income cash flow you could get coming in only can help you. Here we talk about the 3 reporting agencies, Equifax, Experian, TransUnion. You reported a compilation of information that provides a detailed look at your financial situation. By viewing your credit report, you will be able to know what we're looking at and the good characteristics you want to build. So when I look at your report, I could say, yes, 700 plus, this is a go. I could fix everything else. But that's important. If I'm looking at that and they don't pay the credit card, they don't pay the auto loan, you might say, well, I'm going to catch up on my auto loan 2 months later because this year we're doing Carnival down in St. Kitts. Well, yeah, you could do that and catch back up, you'll catch back up, but that delinquency is going to count against your score and reduce your score. Don't make that mistake because it's hard to build it up. Easy to knock it down, very hard to build it up, and time consuming. Here's a little bit about what I've been talking about, and this is the weight to your score to help you understand how your score is derived. Obviously, the most common and heaviest weight is pay your bills. You don't pay your bills, that's going to hit your score the heaviest. Every 30 days that you're delinquent, we're reporting you to the credit bureau to say you're delinquent. It's to tell the other lenders, be careful. So that's why you don't want us doing that, so stay on top of your debt. 30% of your score is how much of your credit is the limits on your credit cards. And I just talked about that, right? No, $2,000 limit, $1,999, $15 a month. That ain't going no place, ain't doing no benefit for you. All they saying, you know what the credit card company is going to say? $199, they reach the limit, and they'll pay $15 a month. I'm going to give them $3,000 more. So you can run it up to $4,999 and pay $15 a month because that means you're paying their salary for the rest of your life. Don't fall into that bucket. Use it almost like a debit card, like cash. I go out and I purchase something. I know I have the money to pay. As a matter of fact, make it work for you. And that's just a little extra tidbit when it comes to credit cards. Make them work for you. Gain the points off of it. Gain the cash back off of it. You only could do that by paying your bills and bringing them down to zero every so often. You start to gain that discipline. You're going to feel good because you say, wow, these points I get off of this credit card, I'm about to buy an extra ticket. But you can't get to that just like you can't get to a mortgage if you're not disciplining yourself to be in that pattern, to be in that good character, okay? How long you have credit is important. It ain't impossible to get a mortgage without credit, but it's difficult. It's expensive. So get yourself some credit card, auto loans, but don't go get it and just spurge and say, I have credit now. Having credit is paying your bills, not running them up. Having good credit, that is. New credit, be cautious opening too many accounts in a short period of time. What are you doing? You're running up a lot of debt. Why would we want to give you more? Be careful, balance it, manage it. Mix it up. Credit card here, auto loan there, personal loan there. Pay them down. Practice. Okay. So, we ready? You have your bank account with your money. You fix your credit. You're up to par. It's time to go into the bank. And you find your property, you know the range, it's time to go into the bank and start your application. Get in there, find your bank. Which one? The best one for you. You know what I recommend, but the best one for you. Practice this. This is what we're going to need. A couple of checks, pay stubs, monthly bank statements from your banker. If you're banking with that same bank where you have your account, it's going to be easy. We don't need to ask you for it. We have it. Put those things in an envelope to have to bring to your banker because every month that this transaction goes on, you're going to have to give me those same documents again. One of the most famous statements from a client is, but I sent you that about 5 times already. You ain't get it yet? It happened. You stay on top of it. So you could say to the banker, if that happens, well, check August 30th. I send it to you 8 a.m. You're going to see it right there. You're going to make me feel stupid because you're going to be right there once you send it an email. So stay on top of it. Don't let the banker tell you you are the one who's holding up the process. You tell the banker, no, I gave that to you. This is when I give it to you. You want it again? You got to have it right there. That's It lessens the frustration and the blame game. Okay? Each lender is different, so that's why it's good for you to do your due diligence and pick the one that fits you. It can be overwhelming to pull together so much information in a short time frame, so start early. Start to practice by getting these documents in order at the beginning of your house hunting journey. Give yourself time to ensure you have all the documents the lender requires. Go into the bank, get yourself a product list. All of us have checklists as to what we're going to want from you in the initial stage. Become familiar with it. You don't know what it is? Ask a question. Now you're ready to start owning your first home. Understand your cost benefits, research your credit and housing options, build your savings. Utilize the services of a real estate professional. I mentioned that earlier, the importance of it. It makes it easier for you. They're helpful. You just find the one that works for you. There are a lot of them. Some are good, some are not so good, just like banks. Some are good, some are not so good. Pick the best one for you. Home inspector. This is where you could get your negotiating going on when you want to negotiate a price. You have to hire an inspector. You want to buy this house, inspector, check that house out. Come and tell me all the flaws so I could go back to the seller and tell them what's wrong with the house and I could lower this price. They will do their job. They ain't going to make up things and tell you the truth about what's going on with the home. So now you could have an educated decision to make and negotiation with the seller. Don't skip. Some people want to skip that and save the money. Don't do that. You're only hurting yourself. Don't be afraid to ask questions, eh? Well, I heard that said earlier. I'll say it again. Don't be afraid to ask every and anything. Who paying this big mortgage? Who paying all these fees? Who coming up with all this money to get this home? You. So act like it, like you're the boss of the transaction and ask questions. Because you're the one that we're asking to pay back thousands of dollars every month on a mortgage. Don't get into it if you ain't fully comfortable. We talk about negotiation, market value, condition of the house, the reason the seller is selling, the economic conditions. Condition is a big C in the 5 C's of credit. Character, capital, capacity, conditions. Your C's of credit. You have to make sure you're in the right condition, the right. Make sure you do what you sign. I always like having a legal involved. I'm not a legal, so I am not going to pretend to be one. I'm going to have a professional read it for me and tell me what I missed or what I need to know or why I need to go back and renegotiate. So don't use your professionals when it comes to transactions. They went to school, they've been in the field, they have the experience. Don't pretend you're a professional if you're not. Use them. Use us. Use EDA. Use the attorney. Okay? Here we are. Complete the application. Submit the documents. We'll order a credit report. List the documents that we use, the standard. Every case is different depending on what the situation is, what your job is. You might be a business owner. So I will need more than just W-2s and pay stubs. I may need your tax reports plus your financial reports. Okay? Debt to income. Here's the ratio you want to learn. This is one of the most important ratios when we're looking at you and analyzing if you're eligible, if you could qualify. What we do again, we take your monthly total debts against your monthly gross income. So for example, let's say you make a little over $60,000 a year. You divide that, you get that down to $5,200 a month, right? A little more than $60,000 a year. You add up all your bills, monthly bills is $1,200. Divide that $1,200 against your $5,200, you should get 0.23. That's 23%. What's the limit that we talked about for debt against your income? Anybody could remember that? Who? 36, and you're right, because that's what Ms. Samuel said. But for us, the banks, and we not, you see, what she explained is that's the most it should be for your mortgage payments only. We adding up all your debts, and the limit is 43. Your debts, your total debts can't be more than 43% of your monthly income, your monthly total debts. Okay? That's how you find out. So you go home, you do that calculation. Well, how much I make a year divided by 12? How much I pay a month? Divide that against your monthly income. Oh, wow, I had 50-something%. Something got to go. No way around that. No, I have no magic for that. Something got to go, or I am not qualifying. Okay? What debts are taken into consideration? All. No debt I leaving out. It's a big loan. A car loan. Or personal loan. I could say, I ain't going to worry about that little debt you get, because it's just a little debt. Hundreds of thousands. I want to know every living thing about you and what you're paying, so I could determine if you could pay this too. You can't pay it out of love. I pay it out of cash. Cash is king. Loan to value. To make it simple, 80-20. A house is 100,000. We give you 80,000, you bring in 20. EDA said just bring 5. We're going to give you 15. Start your bank account. Get your monies in there to become eligible. Okay? Can you purchase a home with a partner if you're not married? Yeah, of course you can. We get all your information and we could get you in there. Can I purchase a home if I don't have a credit history? Of course you can. But why you don't want to do that? It will only cost you more. Don't defeat yourself. Don't fight against yourself. Get your credit established. Get your history going. Get your pattern and practice going. Don't beat yourself and then say, the bank will have my money. Don't beat yourself. There are a lot of opportunities to get to be real cost effective, but it takes commitment and discipline to yourselves, not to me, not to EDA, to yourselves. Keep that in mind to keep that fight going. Because if you say for the bank, to hell with that bank. Can I receive a donation from a family member? Yes, you can. EDA just call you the auntie. They just say, this is your auntie. They're going to give you money. And I could document where that money come from, because it's coming from EDA. If it come from your aunt or your grandmother, they can't just pull it out and say, hey, take 10,000. You have to tell me where my grandma get that money from. That's not bank, that's law. It's called knowing your customer. I have to know who you are, how you're making money, so I could assure it's going to be there for you to pay 30 years later. And even if it's not there to be there 30 years later, I got to be able to validate why not. Did you lose a job? Did auntie die? Okay? We get into you, so you can't get frustrated about that, because you want us to give you hundreds of thousands, right? This ain't nothing big time. Big time business, it got to be big time. Know your loan terms, 10, 15, 20. The longer your term, the more interest you pay, obviously. The bigger your loan, the higher your payment. And when you get your loan, that's just principal and interest. Remember, there's property tax and insurance. We all know insurance is another beast out there. They're not playing with us, so it's important you get to that early as well and start shopping around for the best affordable insurance for you. Insurance and property taxes is a part of your monthly payment. So along with... Yes, it will be, but you're responsible for purchasing it. Sorry, let me correct that. It will be included in your monthly payment, but you will be responsible for purchasing the initial. However, who you have? You have EDA. So just make sure you have the initial investment. Okay, we got in, we approved, we closed. There's just a few tidbits, and after you get your mortgage, pay your mortgage on the first, get into that practice. We give you 15 grace days. Some people believe that due date is the 15th. Don't do that to yourself. Your due date is the first. We give you 15 days because this is a huge transaction with a huge payment. Problems happen to all of us. So we give you enough time to try help yourself. My practice is, if my mortgage due April 1st, I use in the last payday in March to pay that so I could stay ahead of the game. So when rough times do come up and I can't make it that payday, I still have about 30 days in front of me to try to make sure I stay ahead of my game. Don't beat yourselves. Don't make it hard. It's only you're making it harder, and when you skip and you lack discipline, eh? After 30 days, after 15 days, you will be charged an extra fee. Well, if I can't make the monthly payment, I'm going to make the late fee. Stay out of it. After 30 days, we will start telling the bureau. Score starting to go down. 60 days, we on you like flies. Something going wrong, raise your hand. It doesn't mean that things can't go wrong. This is a long-term relationship. What you can't do is ignore it. We are required to help you when things go wrong. Raise your hand and say, hey, something happened here, I get laid off. My spouse get laid off. I lose some income, I need some help here. We have to help you. We can't say too bad, foreclose. We have to give you options. You just have to do your part. 90 days, forget about it. We move into foreclosure. So if you ain't come to us within 90 days, it's trouble. Jump on it early. You see something coming up, even before you start late, an obstacle coming up, oh, let me call my bank and let them know I'm going to have problems there, so I need some help. No shame in that at all. We all go through issues through the course of our life. Okay? Even banks. And they need help too. Just the other day, we were helping banks out with our tax money when they had that big credit crisis, right? They raised their hand and said, we're in trouble, we're about to sink, we have to go shuffle our tax money to help them. You don't be ashamed to do it. It's the law. And there you go. I hope that this was helpful to you guys. I hope you know how to get started now. Take advantage of this excellent program. Again, thank you for showing up. That was the first big step in the process. You showed up. You showed your commitment. Thank you, guys.
Thank you, Mr. Amaro. Excellent presentation. Before we move on to the question and answer segment, I want to mention two things. One, one of the requirements of the program is that that property that you're purchasing or building has to be your primary residence for at least a minimum of 10 years. Each year, you're going to certify annually that this is your primary residence. At the end of the 10-year period, whatever you receive from VI Slice, it officially turns into a grant. What is a grant? Free money that you don't have to pay back. The second thing I want to mention, with this program, you're allowed to have up to 3 units. You, as a borrower, have to reside in the bigger space, and you're allowed to rent out the other 2 units. That's additional income that can go towards your monthly payments. Okay? 2 important facts. So now we're going to proceed with the question and answer segment. We're going to go around with the mics. I saw this hand first. No? You, yeah. I ask that you stand up so the camera could be recognized. One question. One question, and then we'll give somebody else a
Okay. Well, I have a couple of questions, but she only gave me one. Well, anyhow, with the income category or the income range, I mean, how was that determined?
Going to the slide. I'm going to bring up the income requirements.
I can't answer honestly as to how the income range was determined. I don't think we were involved in that process at that time. Would have been our CEO, who's not here presently this evening, but we do have our ACO. But one thing we can tell you is that this income range is considered the moderate income level. So anything lower than this amount will fall into the lower income level, but this is moderate income. They may have looked at maybe other programs that are established maybe through Housing Finance Authority or maybe USDA. I'm not certain, but I do know the income range is strictly for moderate income. There's no program out there for moderate income. So if these monies were again assigned or allowed for the lower income range, then there would have been no opportunities for moderate income. It is so fortunate that where I sat, you allowed for me to utilize this as an example. Let's say these two sisters here, you don't meet the income range, whether it's lower than this or it's higher. Let's say maybe you're making $42,000, but you decide to enter the transaction with yourself because it's household income. Pay attention, household income. Both of you decide to combine your income because maybe you're 24,000, you're 17,000. That could help you to meet this income range. And like Kenisha mentioned, the program allows for you to have a main unit and 2 additional units. So in that way, you decide, that you may occupy one, the other person occupy the other, and then, then you rent the other unit. The main thing is here is to ensure that you get a slice of the pie. I think you had a question. Oh, I'm sorry. Kenisha.
Good evening. My question is, the income requirements for each island is different, but is the income requirement based on where you live at the time of the application or where you're purchasing the property? Because I live on St. John, but let's say I find a property on St. Thomas. Which income range will I be in?
Where you will be residing.
Where you be, the place that I would
You'll
want to purchase
purchasing,
in, not
right.
where you live now.
Right.
Okay.
So you may just be residing here now, but you intend to purchase and you would definitely have to relocate. So your residence would no longer be the island of St. John, right? It'll be to St. Thomas.
I have a question over here.
This is for Mr. Amaro. The attendance today is very great. What day of the week would be St. John classes?
Absolutely, the attendance is great. Thank you guys for showing up. Again, all 3 islands have been fantastic. This young lady, I believe, was asking the same question about how you get started with your classes. So you can go up online, and the key division is VI Housing Finance Authority. I have that right? And that's where you go and get yourself registered and begin your classes, okay? Today, get online and see. There are ongoing classes all year. I do about 3 or 4 classes per year. It's online. Yeah, when I do the classes, it's virtually, yeah. Okay?
I have a question here.
VIHFA.gov is the site they're telling me now. VIHFA.gov. You can't get access to this program unless you've been certified by them. Remember that.
Hi, before we go to your question, anyone driving a blue Suzuki, you're blocking upstairs. We ask that you move the vehicle. A blue Suzuki parked upstairs. Did we get the license plate?
I have 2 questions. One, if you're under construction and you currently already have a mortgage, but it's not with one of our friendly bankers, does that make provision? Is there any provisions for that? Would you have to transfer your mortgage?
I want you to repeat your question. I didn't hear it. I was distracted. My apologies.
Okay, question. If you're construction and you already have a mortgage because you're in the process, let's just say you're in the process, but your mortgage is not with one of our friendly bankers here. Are there any provisions for that? Can you transfer your mortgage if you wanted to take part in the program? Would you be eligible? How would that work?
I'm not standing here because I'm waiting for you to finish. I'm just standing here because, unfortunately, you don't meet the definition of first-time homeowner. You're already in that mortgage. You have already passed the defined. Yeah.
Okay.
It doesn't allow for refinance from one lender to the other.
Okay, since she's answered that, you're not, then the second question doesn't apply. Thank you.
But ask your second question because it would benefit someone else.
Yes. Okay, so the second question is, you said you're allowed up to 3 units. So would that rent, say, if 1 or 2 of those other units, because you're occupying the primary unit, then there would be 1 or 2 other units available for rental. Would that rental income be considered part of your household income?
I don't want to overstep the bank. Banco Popular, assist me with this response, please. But it is allowable, the units. You just have to occupy the larger of the 3. But allow the lender to provide that response.
For rental income, so if you want to use rental income from the other units, was that the question? If you want to use rental income from the other units, generally the requirements would be you would have to have rental income before, which means that you wouldn't be a first-time home buyer. There might be certain scenarios where we would be able to use the income, but we'd have to look at it on a case-by-case basis.
So, Melanie, you're not able to use a percentage of the rent rolls? Is there a percent, or you just look straight on their base income, their household income?
Generally, for a first-time home buyer, it's going to be based on your household income. But for rental income properties, usually you would have to have a history of having a rental to be able to use the rental income.
Thank you for the assistance for your response.
We have another question right here.
Hi, good evening. My question is, once an application is completed, what is the turnover time for an individual to get a response?
Based on our agreement, every lender you see that is participating in the program, they're just not walking up to us sending us an application. All of them have entered into a memorandum of agreement. And our response time should be within 5 days from the date of receipt of a completed application.
Evening. Looking at the income requirements, they vary per island for St. Thomas, St. John, St. Croix. But when you look at the funding limit, obviously for all 3 islands, the cost to construct or to purchase land varies as well. So why doesn't the funding limit vary for all 3 islands as well?
Good question, Jermaine. And the reason it varies right now, because of the economic situation that's taking place, construction has ballooned with inflation. However, with this program, you have available to you different concepts of construction that are now approved by DPNR. You can look at modular systems. You can look at prefabricated systems that have all been approved withstanding the current codes. So you have available to you other options other than the traditional type of construction that would now make it affordable for you. Again, understand, this program is not to finance your whole complete construction. You got to look at your particular situation and determine what is best for you. What will be my approach? What can I afford based on my geographical location? And what is my plan of getting to that end game? So you can't compete and build a house up in Bordeaux Mountain next to the $4 million home, knowing that to get a yard of concrete from St. John Concrete up the hill is going to be $300 a yard. Again, know the location of where you're purchasing that property, where you will be residing, what you can afford based on your financial situation. We are not here to finance construction of your home. We are here to provide you with a gap financing to get you to that step. Understand what the intent of this program is. So you have some work to do. You are provided with all the tools. You're provided with all of the information. Begin tonight to survey and canvass the landscape. See what those costs are. Begin tomorrow of saving that you can now get to your end goal. Okay? That's what this is.
And again, that is what ACO Benjamin mentioned. There are other alternatives to construction other than what was based on your question. But again, it is based on the bank's policies and procedures, and also whether or not you'll be able to get that insured. And again, as he mentioned, must be built within standards based on the new updated codes through the Department of Planning and Natural Resources. So before you begin to draft your plan and so forth, ensure that you are within building codes, ensure that it will meet the bank standards.
Monique, I have a question back here. He's been raising.
Yes.
Yeah, good evening. Yeah, I have two questions. In your deliberations, you expounded quite a lot on first-time home buyers or home owners or property owners. Is there anything in the program that assists somebody? And because another part you mentioned is to assist you where you fall short. So is there anything for a homeowner that have already started a home but fall short in funding because at one point there was none of the banks was not really offering mortgages to complete that home? Is there anything for somebody like that the program would be able to assist them?
What's your question? Is there a mortgage that is tied to that transaction?
Yeah. Under your program.
Let me be clear on your question. Is there a mortgage that is tied to that transaction? Do you have a mortgage? Did the bank finance it?
No.
Then if it's something that you took from your pocket and your own and you're billing over time,
yeah,
it is eligible through the VI Slice program to get that additional support to finalize the transaction. However, we want to stress where only your aunt, your uncle, your cousin, or whomever would give you the difference. You ought to ensure that what the lender's requirements are as it relates to you put it into that project on your own. They may need verification, receipts, and so forth. Melanie, you want to also add to my response, being that you're one of the lenders that provides construction?
Hello, thank you. Yes, we can do the financing on something like that, but you want to keep in mind that we're doing the loan, and you have to qualify for at least 60% of the total project. And then if there's a gap beyond that, that's when VI Slice would come in to play for that.
And what are some of the documents that you would require, being that he's already invested and brought the construction to a percentage? And
we would be looking at, we'd still need your original plans, permits, a current bid from 2 contractors that would show what is left to complete the project. And then we would order an appraisal, which is going to tell us how far you've got on the construction of that property. So what percentage of completion have you got to on that property? And then you would have to qualify for 60% of the as completed value of your property. And then the rest of it could be, if you needed, VI Slice would help fill in the gap between that.
Right. And basically, to summarize what Melanie mentioned, for the VI Slice, and Melanie, you are correct. If you brought that construction to a percentage and you're going through them to finalize that construction, to close it, to ensure that you obtain your occupancy permit, if they cannot provide you with 60% or greater in the financing, then there is a need for VI Slice support. But if it's less than, you've brought that construction to near complete, you don't need the VI Slice support. So anything under that 60%, and I'm going to use Mr. Amaro's example, let's say that construction to complete is 100,000, you only need a loan of 40,000, then that is less than 60%, right? So there's no need for VI Slice. You've surpassed your investment, and that's really less than what we can support.
Good
I'm
evening.
not controlling the mic.
I had two questions. First is for someone, if you are living in a residence on a family property and their VI code allows you to build additional residences, can the program support the construction of an additional residence on a property? So, for example, if you live in your parents' house and you're trying to build because the VI code allows you to build a second residence, can you qualify for Slice? That's the first question.
I would say that property, if it's allowable, but through cadastral, should be subdivided. Subdivide the property, because then there's already other existing, properties or livable space.
So if you can do a further subdivision, the recommendation is that you should.
If the property can be subdivided,
you should.
And you want to construct, then that portion that you subdivided is allowable, because you have the existing property, so you just need construction. That is the lenders that provide the construction, but it is allowed, but not on the existing property without it being subdivided.
Okay. And then the second question was for EZC. Is Nadine still here?
Yes.
Nate, if you purchase I know this is a home ownership program, but if you purchase a piece of property in downtown that has commercial space below, residential space above, does that qualify for Slice and EZC benefits?
Listen, good evening. If I understand the question correctly, you're asking if there's residential upstairs and commercial downstairs, if it qualifies for VI Slice and for enterprise zone. From the enterprise zone perspective, definitely without a doubt it qualifies. Now I'm going to the VI Slice specialist.
Yes. So both of us can work hand in hand. It doesn't affect the bank. So that's not a portion that you would interface with your lender. Your lender has nothing to do with that part of that application. So once the lender sends the application to the VI EDA through the portal, we look at that application, we identify, we remember the address, because we're part of the EDA family, right? So we know what is located in a zone, and we'll bring it to Miss Nadine Marchena Ken's attention, and then she would work with you. So it's just really tax credits and so forth, and it does not impact that application. It doesn't impact your cash flow or anything. It's benefits you're receiving. So it is an eligible activity.
And over here.
Good evening, everyone. My question is, a lot of people are saying they don't have property. So a lot of us need help. Help. Is there other program? Because when I move back home, they tell me the EDC, if the bank deny you, you go to the EDC and they'll approve you. So by now, what I'm understanding, being that I have property, the VI Slice can't help me out. Is that right, or?
We have various programs under the EDA. the one program that if the bank denies your application and then you're referred to the EDA, that is more for our small business program. So that have nothing to do with the VI Slice program. If the bank denies your application for financing for a home, then we have no other program under the EDA that can support your project. Our programs are strictly for small businesses or commercial enterprises. The VI Slice program is a program that we're administering on behalf of the Office of the Governor and the Office of Disaster Recovery. These are funds that were designated for home ownership, first-time homeowners, not for anything that is combined or to be commingled with the VI EDA program, other than if you purchase a home or you're going to construct a home within the zone, then you can speak with the team for Enterprise Zone Commission. But you had a question earlier, and I don't think the audience heard the question that you asked me and what I responded to. I'd like for you to ask that question regarding what you asked me earlier. And you also made a comment regarding the cost of home here in the Virgin Islands.
Yeah, but if you go on real estate books throughout the Virgin Islands, look at St. John, you can't find a house in St. John under $500,000. So how will I qualify for a house with a VI Slice on St. John? Where are you going to find a house on St. John for $300,000 as a first-time homeowner? That's why I asked, if people have property, we just need assistance to push forward to get that program going.
And I wanted you in particular to ask that question because my colleague and I had a sidebar here, and she wanted me to elaborate on my response to you when we were having our little one-on-one throughout my presentation. So it was important for you to ask that question, not only for the audience here, but for those listening. If you have let's say, for example, the realtors, their listing, you think that when you look at their listing and there's a number of homes that may not meet your income level or your household income level, but let's say, for example, your cousin, you're his cousin tonight. Your cousin has maybe like 5 acres. She's considering subdividing those acres to put it out on the market for sale. We recently had a question where in our document, it listed the open market. Someone asked us, what do you mean by the open market? Based on how we were trained, open market is properties that are listed with the realtors. But we were also told that if, for example, there's a for sale sign on that property, and that individual has the for sale sign, or they list it in the papers, or list it where we can identify that the property was listed or is listed for sale, whether it's in a traditional medium or on social media or just a sign, it is still an eligible property on the market. So if your cousin has 5 acres, she decides tonight after listening to our message that she's going to put up a for sale sign, she's subdivided her property, that is also an eligible property. Mr. Amaro spoke about negotiation in his presentation. So if you know, don't go there now beating on the person price $400,000. You know, you don't even need to map or sweep. You know, you just bring your bag and pack out. You know the price is worth it. But if you know you're gonna have to go in and break down the entire kitchen, break down the entire bathroom, pull the electrical, redo plumbing, and so forth, that is worth negotiation. He spoke about an inspector as well. So, excellent question.
Not our program. That's another agency. That's another agency, not our program. So guys, again, your situations are all unique. St. John is even more unique. We totally understand that. The question in terms of the ratio, the mediums, as to how those numbers were derived, they were derived from economic factors. It just wasn't something that was pulled out of a hat and said, let's create this. We have statistical data that tracks economic activity based on income, based on activities, based on services within the Virgin Islands. And that's why the range is what the range is. However, again, this is moderate. If moderate does not help you, there are other programs with other lenders that might be able to assist you that currently exists. So I would recommend for most of you that don't qualify and the income threshold is lower than what you currently are, take a look at USDA. Take a look at USDA. They have programs to assist low-income residents in achieving this same goal. Again, this program was designed specifically for moderate income because there was never a program in existence that focused on those that met this threshold to assist them to get to where they were. Question, a young lady was standing in the back. Yes.
So my question to you is, in the Virgin Islands, there's very little houses that fall under the HUD program. Can your program work if you identify a property that falls within the restrictions of HUD? And if you find and identify that property, will the bank lenders work with you with this program to renovate the property so it can become your...
You answered your own question. Talk with the banks.
My next question was to Mr. Amaro. You mentioned when you deliberated about the idea of trying to break down debt or bring down your debt. You even said about if you only paying your minimum payments on a credit card, they will be laughing at you because you're just paying your salaries. I am pretty sure that many people in here may have had some small personal loans with your institution, which is First Bank. But then you don't allow us to be able to pay on our principal payments to try to bring down our debt faster than usual. So are you prepared to go this far to try to help us in doing that?
Right, good question. So when I talk about keeping your limits down, there's two separate type of lending, right? There's open-end credit, like a line of credit or a credit card, where every time you pay it down, you have available credit. So if it's $5,000, you have it to $5,000, you pay $2,000 down, right? You have $2,000 available credit, still $3,000 in debt. When you talk about personal loans, it's a fixed rate with the same payment every month, and every month you make that payment, your principal goes down, okay? Now, it's on the particular lending institution, as far as I know, usually, including mortgages, personal loans, with good collateral and fixed payment, there's usually no prepayment penalty. So if you get a mortgage, you close and you're on a fixed rate, if you look in your document, and that's why it's important you hire legal and you read your legal documents. You will see most documents say, no, we don't, there's no prepayment penalty to paying off early. Usually the same thing with a personal loan. Now, I can't speak for every lending institution. You know, some people will say, we can't afford for you to pay this off. It's all based on doing business, right? I can't afford for you to pay this off early or else I'm going out of business. I need you to take your time to pay this loan off. But for most major institutions, the Populars, the First Banks, and these type of federal institutions, for those smaller loans, there's usually no prepayment penalty clause.
Hi, good night. I have two questions. One, where is the enterprise area on St. John? And two, this question is for you, Mr. Amaro. Oh.
There's not.
Oh, so there's none? Okay, just kidding. Second question. Mr. Amaro, you touched...
You want to expand on that? No?
The process of getting, just note that enterprise zones are created based on the level of poverty in an area. So, but I'm not in trouble. I am home. So I am not in trouble, right, my people? Okay. But you can, through letters, request a designation, a different type of designation. Under the enterprise zones, if you look at that sheet, there are other types of zones, including a commercial zone. A commercial zone is an area that doesn't have as much residential activity, that is looking distressed and needs to be improved, right? Now, as individuals, you know that you grew up around Croix Bay. So you see what used to be there. I want you to look at Croix Bay again, right? And see what's really there. You'll see that maybe Croix Bay might be an area that you designate. But that's a discussion for the St. Johnians.
Okay, so this isn't my second question, but this is a question to follow up what you just asked. So with the enterprise, is it considered, are we considering the 75% national park that St. John has?
So it is the way that some enterprise zones have been determined is there's letters written and submitted to my office. I take them to the board of directors and make a recommendation, and you've met one of our board members, and I make that recommendation, and then that recommendation, if the board approves, goes to the governor of the Virgin Islands. There's two ways for an enterprise zone by law to be designated. One is through the law. The Senate can pass a law, and then the governor signs off on that law, and it becomes law, right? The other way is through the governor of the Virgin Islands on his own, through an executive order, saying this area is so designated as an enterprise zone.
Okay, thank you. And my second question was for Mr. Amaro. You touched a lot on saving. Do you have any suggestions or comments when it comes to investing?
No. No way.
Question over here.
You're going to have to go to a professional for investment tips. I can't do that in this forum.
Sorry. After you, we have room for one more question, but I'd like to remind everyone to fill out your exit surveys and be reminded to give it to any one of the team members.
And also, Ms. Gums, one of the things we want to also utilize this forum as well, we've brought the lenders out after a busy scheduled work day, and we want you to also visit their tables. At least to know what the level of interest is. You can write your name, provide your email address, your telephone number, get their collateral materials, and then you schedule an appointment to speak to them about your selected individual goals, ideas of becoming a first-time homeowner. So don't walk away this evening without stopping by their tables. We all have someone we have to report to. They're just not coming out here and just going back with an empty sign-in sheet. There ought to be interest because we too have our monthly reporting to the Office of Management and Budget. And so we all have someone we have to report to monthly in terms of the level of needs and the traffic to the interest of the services we offer, so that we can get to the banks. Yes.
Good evening. My question is, in the event that you have acquired a mortgage with one of the listed banks, is there a clause that permits you, if you find a better interest rate, from refinancing with a different bank that you don't have listed? Like, would that terminate your VI slice?
We'll put that question in our parking lot and we'll update our website. Yeah. Because, no, really and truly, remember we have this secondary mortgage And so the other lender has to be willing to accept that second mortgage. You refinancing to another bank for your benefit is fine, but there's a second mortgage that is in place, and also that other lender has to be able to transfer or accept or do whatever they need to do legally as to a closing process. So while it may not be a difficult or direct no, there's a legal process to it, and also the banks has to guide us as well as to how it would work.
If your interest is simply in purchasing land, how does that apply to the program?
Then it's not an eligible activity for VI Slice. First-time homeowner, you can't live on a piece of raw land. That is, by the way, I don't want to cross out your question directly for VI Slice. As Mr. Benjamin mentioned, there are other programs that are out there. You may want to contact Virgin Islands Housing Finance Authority. There are programs that are eligible for land purchase.
Okay, I think you mentioned that you have to be on the program as a first-time person for 10 years, and at that time it converts to a grant.
Must occupy the property for 10 years.
So if you don't occupy it for 10 years, you decide, I'm going to the States, WAPA just too much, I can't afford it. What's going to happen to the money?
There's a declining balance based on what is awarded to you by the secondary grant, and there's a calculation or a formula that is within your mortgage document, and that's what we use to determine what you will repay. Because that's really not a justifiable reason for us to be able to just, eliminate or alleviate your responsibility. It's not a medical emergency, it's not a death, things to that effect. Your concerns are more economic. Is another question? Ms. Fleming, we'll talk on one-on-one.
When this program started? A little about a year ago. Okay? So again, guys, know that we have 2 years left. Well, December 31st, 2026. Begin your process tonight. Tonight you heard from the industry experts. You heard from professionals in this industry. We have our partners, the banks that are here. Before we leave, I want all of you to at least visit them, have a discussion with them this evening. We provided you food when you came in. That was food for thought, right? And for sustenance. Now, get the real food for sustainability, wealth, and longevity to make your dreams come true. I want to thank all of you for being here this evening. We have some more refreshments on the side. Please eat everything that we have provided for you, because the EDA continue to feed you. All right? We wish you a very good night. We will be having some additional town hall meetings based on the exit surveys. Please fill them out so we can see what your real concerns are, and we can tailor-make our next presentation. We bid you all good night. Have a wonderful, safe, and blessed Easter. Thank you.